Welcome back to SAPify Academy. Today we're covering one of the most important topics in SAP SD, billing in SAP, and the different billing types and scenarios you'll see in real projects. Billing is the final step of the order-to-cash process. It's where deliveries turn into invoices, and invoices turn into revenue. In SAP SD, billing is not just create invoice. It's a full mechanism that controls how the invoice is created, what data flows into FI, how prices like PR00, MWST, and discounts are picked, how accounting entries are posted, how revenue is recognized, and how credit memos or cancellations are handled. If you work in SD, FI, or integration, you must understand billing types. In this video, we will break down standard billing types, F2, F8, G2, L2, pro forma billing, credit and debit memos, cancellation documents, delivery-based versus order-based billing, milestone billing, key configuration elements, and real project scenarios. Let's begin. Part 2. Standard billing types, F2, F8, G2, etc. Now let's look at the most important billing types in SAP SD. These are the billing types you will use in every SAP project, and understanding their purpose is critical. Let's start with the most common one. 1. F2, standard invoice. F2 is the default billing type. It's created after the delivery and usually after PGI. Key points. Delivery-based. Posts revenue to FI. Uses pricing from the sales order. Most common invoice in projects. 2. F8. Pro forma invoice. A pro forma invoice is not a real invoice. It does not post to FI. It is used for export documentation, customs, shipment paperwork, customer preview. Think of F8 as a dummy invoice. 3. G2. Credit memo. G2 is used when customer was overcharged, incorrect pricing, damaged goods, wrong quantity. A G2 invoice reduces revenue. It reverses part of the initial billing. 4. SL2. Debit memo. L2 is the opposite of G2. Use it when customer was undercharged. Additional fees apply. Price increase is needed, it increases revenue. 5. S1. Cancellation invoice. When an invoice is created incorrectly, you cancel it using S1. It reverses the accounting document automatically. This is why sequence matters. F2 arrow, S1G2 arrow, S1L2 arrow. S1Y billing types matter. Each billing type controls copy control, pricing behavior, account determination, FI posting, cancellation rules, number range, output types. Billing types are the backbone of SD billing logic. Next, we will look at real scenarios where each type is used. Part 3. Delivery-based versus order-based billing. Now let's talk about one of the most important concepts in SAP SD. Delivery-based billing versus order-based billing. This determines when the invoice is created and which document it is based on. 1. Delivery-based billing. This is the most common billing method in SAP. In delivery-based billing, the invoice is created after the delivery is done, meaning sales order, delivery, PGI, billing, F2. Why companies use this? Because billing should reflect what was actually delivered, not what was ordered. Key points. Uses delivery quantity, uses pricing from the sales order, posts revenue after PGI, avoids overbilling. Default method for most industries. You will see delivery-based billing in retail, manufacturing, FMCG, automotive, food and beverage. 2. Order-based billing. This method creates the invoice directly from the sales order, even if no delivery exists. Sales order, billing, F2 or other type. Order-based billing is used when no physical goods are delivered, Services are billed, consulting, training, maintenance, subscription-style services. Key points. Billing comes from order lines. No PGI required. Pricing directly from order. Delivery document not needed. Which one should you use? It depends on the business model. Physical goods, delivery-based billing services, non-stock items, order-based billing. In many SAP projects, you'll configure both depending on item category. Coming next, real billing scenarios, partial deliveries, split billing, milestone billing, and more. Part 4. Key billing scenarios in SAP SD. Now let's go through the most common billing scenarios you will see in real SAP SD projects. These scenarios appear in every industry: manufacturing, retail, automotive, FMCG, pharma, everywhere. Let's break them down one by one. 1. Partial billing, partial deliveries. This scenario happens when the customer order cannot be fully delivered at once. Example: customer orders 100 units, but only 40 units are available. Delivery 1, 40 units. Delivery 2, 60 units. Billing is created per delivery, so you get invoice 1 for 40 units, invoice 2 for 60 units. SAP uses the delivery quantity, not the order quantity. This is one of the most common scenarios. 2. Consolidated billing, multiple deliveries, one invoice. This scenario combines several deliveries into one single invoice. Example: customer receives 3 deliveries in the same week. Instead of sending 3 invoices, you send one combined invoice. SAP checks: same payer, same billing date, same billing type, say same payment terms, same company code, and if all match, SAP combines them automatically. Customers love this scenario. It reduces paperwork and accounting workload. 3. Individual billing, one delivery, one invoice. Opposite of consolidation. Every delivery gets its own invoice, no merging. Used when customer requires separate invoices, government or regulated clients. Each delivery has different reference numbers. Compliance rules prevent consolidation. 4. Split billing, different data, multiple invoices. This scenario happens automatically in SAP when key data is different. For example, if 2 deliveries have different payer, different billing dates, different payment terms, different shipping conditions, SAP will split the billing into multiple invoices. In real life, most billing issues happen because of unexpected splits. 5. Milestone billing, project-based. This is used in long-term service or engineering projects. Example: 20% on project start, 50% on delivery, 30% on final acceptance. Each milestone creates a billing document. No deliveries are required. Used in construction, engineering, heavy machinery, consulting projects, project system scenarios. 6. Periodic billing, recurring billing. This scenario bills customers on a time-based schedule. Example: monthly subscription fee, annual maintenance, licensing contracts, rental contracts. SAP automatically generates periodic billing documents. Why these scenarios matter? Because in real SAP environments, these are the scenarios customers deal with daily, and consultants must know how billing reacts in each case. Next, we'll talk about credit, debit memo requests, and cancellation billing. 2 huge topics. Part 5. Credit memo requests, debit memo requests, and cancellation billing. Now let's look at 3 important billing correction processes in SAP SD: credit memo requests, debit memo requests, and cancellation billing. These appear in every real SAP project. If you work in SD, FI, or support, you will handle these every week. 1. Credit memo request, VA01, billing G2. A credit memo request is a document created when the customer needs a refund or a reduction in price. Common reasons: wrong pricing, damaged goods, returned goods, overcharged amount, customer dissatisfaction. Process: Step 1. Create credit memo request, VA01, document type CR. Step 2. Approve it, optional workflow. Step 3. Create credit memo billing, G2. Step 4. FI post negative revenue. Key point: the CR document does not post to FI, only the G2 invoice does. 2. Debit memo request, VA01, billing L2. A debit memo request is the opposite. It increases the customer's amount due. Use it when: undercharged customer, extra fees, surcharges, price correction, additional services delivered. Process: Step 1. Create debit memo request, VA01, DR. Step 2. Approve or manually check. Step 3. Create debit memo billing, L2. Key point: debit memos increase revenue. 3. Cancellation billing, S1. Sometimes an invoice is created incorrectly. In SAP, you never delete an invoice. You cancel it using a cancellation billing document. Example: an F2 invoice is wrong. You create S1, which, Psychides, reverses all accounting postings. Creates a negative mirror invoice. Keeps audit trail clean. Cancellation works like this: F2, S1G2, S1L2, S1. After cancellation, you can recreate the correct invoice. Why? These requests are important because they maintain compliance. Every company needs refund processing, price corrections, negative postings, clean FI reconciliation, audit safe processes, credit debit requests and cancellation billing make this possible. Next, we're going into configuration basics and copy control, the heart of SD billing. Part 6. Billing configuration basics, copy control, pricing, account determination. Now let's talk about the core configuration behind SAP SD Billing. This is the part that defines how data flows from the sales order to the delivery and finally to the billing document. Even if you're not a configuration expert yet, understanding these basics will help you a lot in real projects. 1. Copy control, the heart of billing logic. Copy control is what tells SAP what data to copy, how to copy it, and from which document to which document example flows. Sales order, delivery, billing, sales order, billing, order-based. Key configuration, T-code VTFL, VTFA, VTFF. Copy control defines quantity rules, pricing type, text, references, item categories, billing relevance. If billing behaves strangely, copy control is usually the reason. 2. Pricing and billing, reuse of order pricing. Billing uses the pricing result from the sales order, meaning PR0, 0, K004 discounts. Freight taxes, MWST, all come directly from the order unless pricing type says otherwise. Pricing type options. Copy exactly. Redetermine pricing. Copy plus redetermine taxes. Manual price allowed common pricing type equals G. Copy pricing fully. 3. Item category controls billing relevance. This decides whether an item is billable. Common options: A. Delivery-based billing. B. Order-based billing. C. Milestone billing. D. Periodic billing. Item category is one of the most powerful controls in billing. 4. Account determination, how revenue posts to FI. Billing automatically posts to FI, but how? Through account determination. The system checks. Condition type, e.g. PR00. Customer account assignment, material account assignment, chart of accounts, account keys, access sequence, Example, PR00 uses account key. ERL maps to revenue account in FI, post-revenue. This is why billing is tightly integrated with FI. 5. Number ranges and output types. Billing types have their own number range, their own output, invoice print or PDF email, their own posting rules, all controlled and customizing. Summary billing configuration controls everything. Copy control, pricing, item category billing relevance, account determination, and outputs. In the final part, we'll walk through a real end-to-end billing flow used in projects. Part 7, End-to-End. Billing scenario real project example. Plus, outro. Now, let's put everything together and walk through a real end-to-end billing scenario exactly the way it happens in real SAP projects. This is the flow you will use every single day as an SAP SD consultant. Real project scenario. Standard delivery-based billing step 1. Create sales order, VA01. Customer orders, 50 units. Pricing is determined automatically. PR00. MWST, discounts. Freight if applicable. The sales order shows billing type. F2, billing relevance, delivery-based. Step 2, create delivery, VL01N. Warehouse pick stock. Delivery quantity confirmed, 50 units. If stock is not available, partial delivery scenario. If stock is available, full delivery. Step 3, post goods issue, PGI. PGI triggers, inventory reduction, cost of goods sold, COGS. Posting, delivery becomes financially relevant. Now SAP allows billing. Step 4, create billing document, VF01 or VF04. Billing type, F2, standard invoice. From the delivery, SAP copies pricing and quantities. Behind the scenes, copy control runs. Pricing type is checked. Account determination assigns revenue accounts. Step 5, posting to FI. Once billing is saved, revenue is posted. Receivables are created. Tax is posted. Accounting document is generated. The customer now owes the company money. Step 6, output, printing invoices. Printed, emailed, sent via EDI, uploaded to customer portal. Output is controlled by NACE, output management. Common billing issues you'll see in projects. Billing split due to payer differences. Incorrect pricing redetermination. Account determination errors. Missing revenue account. Incorrect item category billing relevance. Wrong copy control settings. Rejection of credit what's your debit memo requests. You will handle these in every SAP SD support job. Outro. This was your complete guide to SAP SD billing types and scenarios. If this video helped you understand billing better, make sure to like the video, subscribe to SAPify Academy, and comment below. Which billing scenario should we cover in detail next? Thanks for watching. See you in the next SAP video.